travel to these locations.
Right. So, so you've joined now, it's 8 months, and we've actually seen a lot of changes in many organizations. And strangely enough, during COVID time, so many new CEOs coming in, not just IT, but other things. And, everybody has different style in terms of what changes they bring in and so on. Uh, what are your, how would you, categorize yourself? How do you look at making these changes over next few, years, if you may?
Yeah. So Sanjeev, I'll back up a bit before I answer your question. So when I came on board, the first thing I did was to work on transition, immerse myself into the firm. And during this period, the first 3 months or so that I was after joining in, uh, I spoke one-on-one with over 60 clients. I spoke one-on-one with over 150 associates of the firm, worked very closely with the board of directors, engaged very closely with analysts such as yourself, with the investor community, just to get to know the firm, with the clients, to understand the firm, to reassure them of the leadership transition, and to also get a sense of what is their expectation from Zensar going forward.
Mhm.
Right? From our associates, getting to learn the firm, but also what's their aspiration as they grow within Zensar. And then the external community, be it analysts, investors. So what came out very clearly was that I was inheriting a firm with a very solid foundation, great clients who trusted us, relied upon us, loyal to us, very skilled set of associates, passionate about being Zensarians, right? And a very resilient and process mature company.
Right.
So the approach that I have taken along this uh, journey has been to build on top of the foundation, right? To strengthen the areas that were already areas of strength for us, to fix hotspots. There were a few,
Right.
and also chart out a strategy to drive growth for the company for the future. That is the approach that I have taken. That is also the style in which I
Right.
have operated.
Right. But in terms of making changes at the people level, do you think, your team is complete, or, you are planning to make a few changes?
Sure. So, Sanjeev, again, I'll answer the question in multiple parts. So, the first part is consolidating on our strengths. So, if you look at the firm, just backing up a little again, is that the first phase of the firm of Zensar as we know it, we became Zensar turn of the century. The first uh, era was to put the foundation in place. Uh, then the second era was, around 2016 when my predecessor came and launched an initiative that was called Living Digital, where the
Mhm.
objective was to digitalize the internals of the firm, where now, a very successful initiative, where now we operate on an economy of applications, basically run the company on a smartphone, and also to drive the company towards the future to realize the potential that came to the industry through the rise of digital.
Right.
Right? So towards that, we made investments in a couple of experience companies. A company called Foolproof in the UK that specialized in experience product research strategy design, and a company called Indigo Slate in the US that specializes in digital transformation, experience transformation, creative content services, marketing technology services. A couple of other tuck-in acquisitions, one to strengthen our insurance portfolio and another to strengthen the supply chain capability in our retail consumer goods portfolio, right? So good investments give us good momentum in specific areas. So these were the good things. The other
Mhm.
side of the picture was that when I was coming in, growth had been soft for several quarters,
Right.
right? But the margins were historically at high levels, at historical high levels. The company was zero debt and and a healthy cash balance. Right now, obviously, for us within the industry that we operate in and looking into the future, the objective that I came with was to reinvigorate profitable growth, which later on we kind of enhanced to indicate that our objective was to drive predictable, sustainable, and profitable growth. So identified a few hotspots, right? One was around how we were structured from a service portfolio perspective. Another was in terms of the fact that, back to the point around growth had been soft, but margins had been good. A view that during the pandemic we tightened the belt and we kept it tightened for too long. So there was need and opportunity to increase investment in growth.
Right.
So the result of that was very early on, while we were working to refresh our strategy, we took an early call that we will reinvest some of the EBITDA headroom that we had generated, this cash position that we had built back into growth, right? And in that, now back to your question, in that there have been investment in terms of augmenting the teams.
Right.
There have been investment in creating new positions to drive our SGOs that we have created. Our strategy revolves, and I'll talk to you more about it. I'm sure as we go forward around the strategic growth opportunities that we have created for the firm to sharpen our service structure for the market, the value proposition that we take to our clients, the certain leadership positions that we created as a result of this SGO structure, and certain open positions, as well as a few tweaks that we determined that we needed to do to address some hotspots.
Right.
And the result of which has been that we've been hiring a lot of people. So we have hired a new head of our consumer services business. We have hired a new person to head delivery for consumer services. About 6 months before I had joined, we had hired a new guy to lead our banking practice, very solid person. Just after I joined, we hired a new head of delivery for banking. We have hired a new head of our advanced engineering services practice, which is our strategic growth opportunity number 2. We have also hired a bunch of leaders around our data engineering practice. A big focus area for us is some of the SaaS platforms that we have decided to invest in. So we've hired a cracker of a guy to run our Salesforce practice. So overall, we've been on a very significant team augmentation in leadership, both in markets and in delivery. And I would say that we are about 80% of the way through in terms of our hiring for our target operating model.
Right. That's great to hear. So one macro question before going back to your strategy. So if we go back 2-3 years ago, everybody, I think the conventional wisdom was that the large is becoming larger. The smaller companies in IT are either going to stagnate or maybe even kind of dwindle down. And you were in a large organization that time yourself, and probably, but something has turned on its head over last 1 year, and it's almost every company that we speak to talks about growth, visibility, and so on. What has changed according to you? What is that factor that's changed?
Right. So look, just again, let me start with a little bit of background.
Yeah.
When I joined TCS was 3,000 people. When I left them, they were almost 100,000 strong, right? When I joined Cognizant, it was 5,000 people. When I left them, it was 275,000 strong. So I've seen companies grow from small to large. Now, if you look at, now coming back to your question, look, we are now in an environment that is extremely demand rich, but at the same time, highly supply constrained. Now, what is driving this demand in the market? If I were to call out a few vectors that are driving this demand, the first vector is that there is, because of the pandemic, there is business models that are evolving. There are new channels for customer engagement that are evolving, and our clients are reorienting themselves towards these new business models and these new channels towards customer engagement.
Yeah.
Now, when you start investing in these new channels of customer engagement, it's not just the customer front end that needs to enhance, but you
Mm.
also need to rewire your back end supply chain.
Yeah.
And a lot of this is done through technology.
Mm.
So this has unleashed massive demand in the market
Right.
towards change services. The other thing that has happened is that people can't wait 2, 3, 4 years to bring in new platform, new services.
Mm.
There is a very significant thrust in the industry to the clients that we serve to create agility to bring new products as quickly to the market as possible. Now, one of the opportunities that allows our clients to be agile and high speed, bring products and features faster to the market is uh, building on cloud and using cloud to drive agility.
Yeah.
That has unleashed another uh, you know uh, set of opportunities and has opened up a major demand vector. Third is data, and it's almost a cliche now, but as the opportunity around as the clients, as our customers drive new channels, new focus areas, new ways of engaging our customers, their dependence on data for insights, for decision making, to drive next best action, etc., is only growing. And this is another massive vector for demand that has been created, right? What is happening increasingly is that our clients are not just relying on the big players in the market, but increasingly also relying on the mid segment and boutique players to help drive services along these 3 or 4 vectors, which is what is creating opportunities for firms like us.
Right. So my last question, and then I'll get Devashish to ask more strategy level questions for what you guys are doing. But Ajay, last question from me. In terms of if I look at Zensar over next 5 years, what do you think? What's your kind of what's your goal, so to say, in terms of is there any numerical goal, or is some people are saying that I will want to go more than industry growth, or so what kind of goals have you set, and what would be the key drivers of that, you think?
Sure. So Sanjeev, uh, the first goal is that we want to drive predictable, sustainable, profitable growth. That is number one. Number two is, in order to, while we achieve that, our objective is to be in the top quartile of growth within the mid segment. That is number two. Number three is how we position ourselves for growth. We've made some very valuable investment in experience services. We are making some increasing set of investments in data engineering and advanced engineering, and we already have a very strong core of technology. So our positioning in the market as we go forward is around what we call as experience-led engineering and experience-led infrastructure. So that is our positioning in the market for the next foreseeable future, right? So drive predictable, sustainable, profitable growth, get to the top quartile of growth within our segment. And three is identify ourselves, position ourselves as an experience-led engineering and an experience-led infrastructure services company.
Right. I think that's great. And I think what I'll do is I'll hand it to Devashish to ask you more kind of specific questions.
Sure.
Devashish.
Thanks, Sanjeev. And thank you very much for giving us the opportunity to host you, sir. And so some of the points that Sanjeev has already touched, which we will discuss in little more detail. So one of the things that you are very vocal about is dividing this company in 5 SGOs, and then you have 4 growth pillars. Then you have two box strategy, right? So if you can help us to understand one by one how you have divided these five SGOs, what is the kind of opportunity that you can find in these areas?
Sure, sure. So, Devashish, let me first do a quick recap of
Absolutely.
our strategy, right? So,
Absolutely.
and I worked on that within about 8 weeks after I joined. Uh, Along with the team, I started working to refresh the strategy of the company. Took us an 8 week cycle to put the strategy together and then publish it. And that's when we announced. So, our strategy revolves around five strategic growth opportunities.
Yeah.
There are experience services, advanced engineering services, data engineering, analytics, AI, ML, application services, and foundation services, which is also infrastructure services. Each one of these SGO is instantiated by 2 to 5 crystallized set of services, which we call playbooks.
Okay.
And a total of 21 such playbooks have been identified at a company level. So 5 SGO,
Okay.
21 playbooks to be, and all of this to be executed through what we call as 4 pillars of execution. Pillar 1,
Right.
sales expansion and sales transformation. Pillar 2 is talent transformation. 3 is strategic M&A, and 4th is strategic partnerships. So this, in a nutshell, is our strategy.
Okay. Okay. Great. And if you can help us to understand that how you kind of find out these five SGOs that you are very vocal in talking about, and what are the kind of opportunities that you find out in each and every strategy and each and every SGO. And one related question is you have a two-box strategy also where you have vertical and SGO running kind of parallelly. So trying to understand that, and maybe your sales team is also kind of I mean marketing team is also kind of divided accordingly. So if you can help us, because what when we talk to most of the our peers, it is most of the cases the sales team is vertically divided. Here we have two parallel processes running. So do you think that it is creating certain level of confusion in people's mind, or you have internally created such a crystal clear way that it is clearly communicated to everybody?
Right. So Devashish, again, I'm going to back up a little. So
Yes, please.
into the firm, Devashish, we operated in what was called a 3 by 3 by 2 format.
Okay.
And the 3 by 3 by 2 was 3 geographies, which is US, UK, and Europe, and South Africa. These are the 3 geographies. 3 verticals were high-tech manufacturing, banking, financial services, insurance, and consumer services. And then 2 service lines. Uh, One was called DAS, Digital Application Services, and the second was Digital Foundation Services. Digital Foundation Services, which runs our infrastructure services practice, was completely revamped about 3 years ago, and a
Okay.
solution framework was constituted. We went to the market using this framework that we call as experience-led infrastructure services. That resonated very well with the market, continues to do extremely well with our clients, has a very strong pipeline, and we are very happy that particular service line is unchanged from how it was earlier.
Okay. Okay.
The big change is around what we call as digital application services.
Okay.
So this used to be 85% of the firm's business,
Right.
right? Which over a period of time became this massive mass, undifferentiated, difficult to articulate value proposition for our clients, and difficult to drive opportunities within the market. And that is the problem that we have addressed through these 5 SGOs. So if you look at the 5 SGOs, the 5th SGO is unchanged. It is the same.
Right. Right.
The first 4 are basically a better, sharper structure of what earlier was digital application services. To make sure that we put a better structure, a sharper go-to-market, create a crystallized set of services, and remove ambiguity for our
Okay.
field.
Okay. Okay.
What this new structure allows us to do is to very clearly articulate our value proposition, to spot opportunities, to address opportunities and put where needed proactive proposals, right? And all is to drive a better value conversation with our clients.
Understood.
Now, this structure of with three dimensions, which is a geography dimension, a vertical dimension, and a service line dimension, is not new in our industry.
Right.
The way it will operate in our context is that the customer relationships are held by the verticals and or the geographies.
Okay.
The sales teams are largely with the verticals and the geographies. The service line enmesh with the verticals and geographies to drive very specific and, as I mentioned, crystallized set of services to our clients, the relationships of which are owned by vertical/geographies. Now, this kind of a horizontal vertical structure, Devashish, is not new in our industry.
Okay, understood. Yes.
And this mesh that we have created this with very aligned targets, very aligned KPIs, and a mechanism where the market and the volumes and the services are tracked both at a vertical level and at a service line level. Of course, geography is the other dimension that plays into this.
Understood. Okay. If I can squeeze here one more information, so how my sales team is getting incentivized here? One of your four pillar is adding new logo and hunting new clients. So, is there already our incentive structure was properly created before you joining, or you have revamped it, and how it is look like today?
Sure. Devashish, the incentive structure per se was never a problem.
Right.
Okay. The problem that we have addressed to solve as a part of this strategy refresh exercise is multifold. And let me give you a sense of what we have done. First is that our go-to-market sales function was a diffused function between hunting and farming.
Okay.
The first thing we have done is we have clearly identified and separated out hunting and farming.
Okay.
Now, hunting and farming need to be supported by vertical teams for domain and subject matter expertise, and by the service line teams, which is the SGOs, for horizontal conversations, be it around experience, advanced engineering or cloud data, Salesforce, other SaaS platforms, infrastructure services, etc. Right? Now, these two converge to support the hunter-farmer combination to drive sales conversations. Right? So that is the new structure.
Okay. Okay.
Right?
Understood.
Our ability to bring together hunter, farmer, and domain and or service line together to drive value conversations with our customers is creating opportunities in terms of increased pipeline, in terms of increased logo win rate, increased harvest of business, and also increased expansion within our existing customers. We already see early signs of success. We already see green shoots within this new structure, and it just also kind of it also provides us with that confidence that we are heading in the right direction.
Great. Also, you speak a lot about experience-led engineering and experience-led infrastructure. So, if you can help us to understand how it is different than a normal IT service that we provide, what the extra value addition that we are doing, and if we are doing that value addition, are we able to charge a better price for that, or are we kind of getting a better seat on the table? How is that happening?
Sure, Devashish. So, just backing up a little bit, right? We made, with a view to expand the digitalization of the company, right? We put some early bets around experience, right? Now, the result of this was through Foolproof and Indigo Slate, we were winning a lot of projects around experience design, experience strategy,
Correct.
Creative content services, etc. a lot of these wins, and we were winning quite a few new clients, right? A lot of these wins were around experience, research, strategy, design.
Right.
Our ability to catch downstream business, which was engineering, was somewhat limited because of a little gap between these experience outfits and the core technology services that traditional Zensar provided.
Mm-hmm.
Now, even before I came in, we were already starting to work towards plugging that gap, right? Now that effort and the direction towards that has only doubled.
Okay. Okay.
So what this allows us to do is that the thought leadership conversation that we are able to drive and our ability to go, uh, both harvest new logos as well as drive conversations within existing logos is further augmented by our ability to catch this downstream engineering business. Right?
Okay.
So this
Okay.
continuum that we have created, experience-led engineering, is something that it's it's a master playbook that is resonating very well within the industry, and it is also creating a lot of pipeline for us for our business. Having said that, the sales motion that we have is one is of course experience-led engineering, but because we have created such strong and structured service lines around engineering and data, our sales motion could also start with engineering or could start with data and then move up and down.
Okay.
So while we are driving the experience-led engineering continuum, we have also created an ability where the conversation starts with engineering and motions up or down, or the conversation starts with data engineering, analytics, AI, ML, and then motions up and down. So they can
Mm-hmm.
either together in a continuum or individually as service lines. And this then gives us an ability to just bring that sharp focus to the market and our ability to drive conversations with our customers and our ability to, basically drive sales and increase pipeline.
Correct, correct. Understood. One question you have already touched upon it. Zensar started talking about digital way before our peers started talking about it, thanks to the predecessors that you have. And today we are like 68, 69% revenue coming from digital, which is much higher than most of the other peers that we have. So, what is the benefit here, and how you are kind of utilizing this? Ahead of the curves positioning to get into the new clients areas, or even mining the existing clients.
Right. So you're right, Devashish, that we made investments in digital,
Yes.
a lot of them long before our peer group did. What I did inherit, as I mentioned when I came in, is a company that had made very solid investments in experience, a company that had made very good investments in a couple of verticals, right? Uh, this whole living digital initiative that we drove internally within the firm created what looked like, what was otherwise a 50-year-old firm, but looked like clearly a digital native firm in a span of 5 years in which it was implemented, profiled very well, by the industry as well. Uh, Two things. One is that while these were individually very strong service lines that we put trust on, stitching it together was something that we could have done a better job of executing on. And that is the first problem statement that we are fixing with this new five SGO structure, is how to stitch together this digital continuum so as to drive value conversations for our clients as well as to drive sales thrust into the market. That stitching together of the continuum is what we have addressed in this strategy and what we are executing towards. The second thing is that if we look at digital, right? So, a simple way in which I often explain digital is it's a confluence of experience and design, engineering, data, and velocity.
Right.
So we have fixed experience, design, engineering, and data through the five SGOs that we have created. The last element of this confluence is velocity. And velocity is now identified as a critical platform, which we've also translated into a new brand platform for Zensar.
Mm-hmm. Mm-hmm.
What this allows us to do is A, better stitch together, and two, these three things together with velocity just helps us position ourselves better to grab market opportunity that is coming out of what I spoke of, which is pandemic related disruption, drive towards new channels, rewiring of supply chain, adoption of cloud, and focus on data. It just helps us enables us to better capture these demand vectors.
Understood. Great. One question, just you have mentioned about cloud-related disruptions. So, if I talk to the investor community today, we find a two school of thoughts. One is saying it's a pent-up demand which is going to go away in next 2 to 3 quarters, and the one is saying it's at least going to last for next 4 to 5 years. So, which school of thought you belong to, and if you can give us some level of idea that why you have this thought.
So I belong to the latter school.
I also, by the way.
My view is that this demand rich environment that we have encountered, that we have hit as an industry, is here to stay at least 36 months.
Okay.
And why I touched on elements of it, maybe I'll repeat some of those points, Devashish. First of all, is that this drive towards new channels of how you engage with the customer is creating not just changes to business models that our clients are driving towards, but also investments in developing these channels.
Right.
This has created a very substantial demand area in terms of customer engagement, in terms of customer experience.
Okay.
It doesn't stop here.
Okay.
None of this is possible unless you rewire yourself. And this is across industries, be it financial services, retail, consumer goods, healthcare, all industries. As you evolve your customer engagement, as you drive new channels, as you just enhance that your ability to engage with your clients in this new touchless, contactless, frictionless world, you have to rewire your front, middle, back office, or you have to rewire your supply chains.
Right.
There is a lot of investment happening in this space, and this is ground up investment. It is not just changing supply chains, but what you're trying to address while making these changes to the backend systems is an ability that you can bring in new changes, new features faster, better, cheaper. So a lot of these changes are being done, and new architectures like API architectures, microservices driven architectures, etc., is creating massive demand for technology services. Where our clients, what they are trying to do is re-architect their backend systems so as to drive faster go-to-markets. That is another area. Third area is that in order to do all of this, a big enabler that the industry has realized is the native architecture of cloud. Native architecture of cloud inherently drives velocity, inherently drives agility. So while they're doing all of this, there is a lot of effort, a lot of investment that is being made to migrate to cloud, not just lift and shift, but also re-architecting in this new cloud environment. Without going into details, in terms of what is being driven to move from virtual to containers, all of that. All of this is being done to drive this new service-based architecture, as well as an ability to bring services and features to the market better, faster, cheaper. And the fourth one is the promise of data. Right now, what was earlier in textbooks and labs is now mainstream, which is using the power of data to drive decision making.
Correct.
And that has unleashed another big area of demand. So all of these four put together is a demand engine that is going to last for at least the next 36 months, if not longer.
Correct. Great. It's
That
not part of my agenda, but
level playing field. The big boys can play as well as the mid cap and even some boutique players. So it has leveled their field, which was to Sanjeev's original point that we see this interesting pattern trend in the market, where the caps are suddenly back in business.
In fact, if you can bring in the subject matter expertise, I think you have more value to today's world.
Top of this, exactly. If you overlay business domain, right? then the value conversation is that much enhanced. Now, can you do
Absolutely.
cloud-only conversation with clients? Yes, you can, right? So if today you are a provider of services around, let's say, the three hyperscalers, and there are more that are shaping up, that itself is a very significant demand area. But if you're able
Yes.
to bring an overlay domain on top of this, then your value to the client increases multifold.
Absolutely, absolutely. And I can't resist myself to ask this question, although it was not my part of original agenda. So this huge demand surge that we are seeing today, some of my discussion with some of your peers are telling me that if you are providing solution which is apt to the guy, I mean to the client, he is ready to pay you a price. Even he is ready to compensate for the wage hikes or the cost inflation that you are having today. So, what is your experience with your clients?
Sure. So Devashish, that is a tale of two cities,
Okay.
right? Uh, the client budgets have gone up, but have gone up only marginally,
Yes.
right? So now here is a customer who's got this huge need for investment in change, and not enough dollars. So the first thing they're doing is they're trying to continuously, and this is a trend that began over 10 years ago, is to continuously compress the cost of run the business, which is app
Yes.
support, etc.
Yes. Yes.
That place actually cost is getting compressed, and that space is getting fast commoditized,
Hmm.
right? And the pricing, there's massive pricing pressure there because it's a hyper competitive space. Everybody's trying to grab a piece of that action to create you know one opportunity to drive annuity, etc. But that space is getting compressed. On the other side, uh, investment, especially in new areas of technology, and especially around cloud native architectures and around data platforms, is increasing, which is creating need for talent, which is in very short supply. So
Right.
far, the conversations with the clients is there is a third aspect to it, is that look, we are in an industry which is a hyper competitive industry, right? So the first uh, step that the clients are taking is that, look, let's compress run costs. Second is, how do I make sure that I continue with the existing cost base, right? So how do I ensure that I use this competitive environment to not increase rates? But
Hmm.
increasingly, as we see, and especially with what we have seen the last 6 months, is that demand far outstrips supplies. Far, supply, given the demand situation, is very inelastic. That has led to the phenomenon that you have described, where selectively we are able to go to our clients and for certain set of niche skills ask for differentiated rates. That has begun. Now,
Great.
this rate conversation is going to continue over the course of next 12 to 18 months. The clients are going to try to keep it compressed because their budgets are limited. Whereas on the other side, the supply situation is so bad that there is going to be wage pressures, and that will translate into need for rate hikes, which the clients have to give. And they are beginning to give in bits and pieces.
Correct. And last year, when clients were in trouble, we supported them, right? So it is their moral duty also. And one, you have raised the question of supply. So, do you think that the supply pressure is kind of cooling down, and it is going to cool down in next 2 to 3 quarters, or it will like last for a very long period of time, which may impact our margins as an industry? I'm asking.
Yeah, yeah. So Devashish, my view is that for this supply situation to resolve is going to take 4 to 6 quarters at least.
Okay.
And there are two reasons for this. First is that demand, especially in certain areas, has just taken off, and there is a massive mismatch between demand and supply.
Right.
For the supply to be created in these areas of demand, it's going to take 4 to 6 quarters. The other side is that during the pandemic, the industry's ability and rate of generation of that supply suffered.
Yes.
As
Yes.
we come out of the pandemic, as we not even come out of the pandemic, as we start operating in what is the new normal, we start investing in recreating that supply that we stopped creating through course of the pandemic, this situation will gradually ease. But for
Hmm.
that supply to rise up to the level of demand is going to take 4 to 6 quarters at least. At least.
Understood. But maybe one positive point of this thing is after 4 to 6 quarter, we as an industry will come out with a much more favorable pyramid structure because of fresher getting inducted into the system.
Absolutely.
Yeah.
Absolutely. And that's also a part of our own talent transformation approach. And it's, I'm sure, the same with the peer group as well,
Yes.
which is that as you go to create new supply from the fresh crop that comes out of our engineering colleges, it will also fix the pyramid.
Correct. And plus tier two, tier three, which was not the target audience for us for a very long period of time now.
Yeah.
Yes. Thank you very much for answering the macro level questions. Coming back to Zensar again, we are very strong in high tech historically,
Mhm.
and last quarter we have seen a benefit of that. We have with a very strong growth in high tech. Now we are living in a world where everything is happening around high tech.
Mhm.
So,
Mhm.
what is your view of your strong positioning in high tech? Do you think that you have that kind of client already mined or already in discussion where this high tech exposure will give you a far higher benefit than as compared to your competition?
Yeah. So high tech is the largest vertical for us,
Yes,
right? And that actually positions us quite well. The short answer, Devashish, is that yes, this focus is going to yield benefits for us going forward, right?
yeah, great.
Now, there are
Yeah,
two parts to our high tech business. There is high tech and there is manufacturing,
yes,
right? Uh, High tech just continued to do well during, I would say, most high tech, not all high tech, but most high tech did well during the pandemic. Certain parts of what it comprises the high tech ecosystem actually suffered during the pandemic.
hmm, hmm,
And we also, bore a bit of impact of that. Not
yes,
all of our high tech clients did well. Some of them,
yes, yes,
suffered some challenges during the pandemic, and as they come out, as they stabilize, our business with them improves. But then there is the other part of high tech, which did well during the pandemic, will continue to do well, and that is a massive, massive area of focus for us. What is
great.
interesting is that the manufacturing part of the high tech manufacturing vertical that we had, that is seeing some interesting dynamics.
Okay, okay,
Led by two things. One is Industry 4.0, which is this, the whole
yes,
kind of enterprise.
yes,
And the third thing, which is, everything as a service. So
yes,
changing their business models to drive to something that's called everything as a service.
yes,
Two things is going to also within the manufacturing space, which earlier, was a bit moribund over the course of last several quarters, is going to enhance spend in that. And I think given our focus on high tech and manufacturing, we think it's going to drive a lot of, pipeline for us in the near future.
Yes, understand. On the flip side of that, we have very limited exposure to this traditional verticals like BFSIs and retails. And you in Cognizant has a very long period of time drove those verticals. So how do you use this as an opportunity, or you think this is a kind of threat for us, and we should not go on that direction? Whatever capability that we have, we should build up on that. On that, what is your strategy on that side?
Sure, sure. So Devashish, consumer services, which drives our retail consumer goods and travel hospitality practice, has been a traditional area of focus for Zensar. So if you
Okay.
look at the acquisitions, not just the Keystone acquisition that we did to enhance our capability in supply chain systems, but prior to that, and that of course goes back a long time ago, we acquired a company called Professional Access
Yes.
to build a capability around e-commerce, etc. So this is a high focus vertical for us,
Yes.
right? Now, this is also a vertical that suffered really, really badly for obvious reasons during the pandemic.
Right. Right.
The big sections of retail business, there are certain parts of retail that did very well, but there are big chunks of retail business that didn't do very well. Coming out of the pandemic, this is also the industry that is rebounding at a very fast clip.
Okay.
So while we held back our investments in course of the pandemic, and if anything, we kind of tightened our purses very, very hard with consumer services. As we come out of the pandemic and as this industry rebounds, we are putting a lot of horsepower back into this business.
Understood. Yes.
So
Understood.
that is consumer services. Now, banking, financial services, insurance has been strong for us in UK and South Africa, not as much in
Yes.
US.
Yes.
Number one, that is banking. Now, insurance, we already made some early moves, right? When we bought,
Correct.
when we acquired Synergure, we acquired with
Yeah.
an objective to drive a specific kind of business within the small mid-segment insurance, in property and casualty.
Yes.
That thrust is not diminished. If anything,
Yes.
we continue to double down in small segment PNC, but we are now expanding into other areas of insurance, be it large PNCs or also in life and annuity. So we have a new
Right.
leader. We brought in a very, very strong team in insurance to augment an existing capability in insurance that was driven largely through the Synergure acquisition.
Mm-hmm.
And then, of course, we've got the UK and South Africa business where we continue to thrive, especially
Yes.
Africa. On banking side, it's a space you can't ignore. And yes,
Absolutely.
we are intense, but it's also an area where we are making disproportionate investment,
Mm-hmm. Mm-hmm.
both organic and inorganic.
Correct.
Organic investment in terms of the team that we have built in banking now is really an enviable team. We have brought in some real high quality leadership into the team, both overall leadership as well as sales leadership, pre-sales, and delivery. The other thing is that our acquisition of M3BI had two objectives. One objective is to enhance our capability in advanced engineering and data engineering services. The second objective is that a big part of their business comes from the banking space in North America. So
Understood.
this further lends to our focus and thrust on the BFSI segment. So short answer is, if I just condense, and summarize it all, then insurance starting with small PNC, now growing into the large. BFS, you can't ignore this segment. I mean, it's one of the highest spend segments. You can't ignore it. We are double down. And we will continue to see growth in this. The early signs of success are very encouraging.
Correct. Two last questions from my side. One is related to again growth and strategy. You have spoken about global partnership, and on the one side, on the other side, you have doubled down your focus on products and solution, which we call productization of services. So, where are we standing today? And we are discussing today when we have already signed a global partnership agreement today only. So just try to kind of understand that where we are standing in this front and how we have moved in last 7-8 months after you joined.
So it's a good one, Devashish. So just a quick recap. Strategy is 5 SGOs, 21 playbooks, 4 pillars: sales expansion, talent, M&A, and strategic partnerships. Right? Strategic partnerships for us are a major, as it is for most of the industry.
Yes.
It's a
Yes.
major focus area for us in terms of how we go to market.
Yes.
The change we have done there is that we were and continue to have over 30 such partnerships, right? We've just divided these partnerships into two groups: strategic partnerships and growth partnerships, right? Strategic partnerships, which includes partnerships with the hyperscalers, big experience platforms, a couple of these massive SaaS players, is now going to be sponsored by the senior most leadership of the firm.
Okay. Okay.
Growth partnerships, which are either driven by clients or by projects, or as we identify new areas and new products, we bring them in as growth partnerships. For example, there's some new data platforms that are coming to bear, Snowflake, etc. Those are growth partnerships, which over a period of time could become strategic partnerships.
Yes.
So we have made sure that we put adequate focus on these strategic partnerships because they will drive next 18 to 24 months pipeline and revenue for us, while focusing on growth partnerships to pick out the winners and also to serve our clients. Outside of this, there are vertical-led partnerships. For example, in insurance, we've got a partnership with Guidewire. We're increasing that into a couple of other platforms, right? So those remain intact. So this is a very core pillar for us in terms of how we execute on our strategy. In terms of our own investments in products, it is going to be very limited. It is going to be to the extent that it drives solution accelerators to provide a vertical value chain to our clients. We are not going to get into full-fledged product business.
Absolutely. That is not our focus should be being a service company. But this is my personal opinion. I think that you have very well put between growth and strategy partnership. I think when most of the investors and analyst community talk about, I think this growth partnership is something which is very underestimated by the market today. That is what my personal opinion is. So last question, sir. You are very vocal, and thank you for that. You have first person to came and said that these are the mistakes I made. I mean, as a company we made. Now we are investing, which may impact our margin little bit here and there for next 2 to 3 quarters. I don't think any other peer of yours is so vocal about requirement of investments and all this thing. Where do you see your margin, let's say next 2 to 3 years? I'm not asking about 2 to 3 quarters.
Yeah. So Devashish, where we want to be, right?
Yeah.
Growth perspective, we want to be top quartile of mid segment. From a margin perspective, we want to be in high teens in 2 to 3 year time frame.
Great.
And we have a very, very strong plan in place to get to that.
Thank you very much for answering the question, sir. And your body language shows the passion of the strategies that you have kind of articulated. It's in your body language, sir. That passion is in your body language. Thank you very much, sir, for your time.
Ajay, I have one last question from my
Sure.
side before we end, which is in terms of capital allocation. I guess you'll be throwing up cash, and in terms of acquisitions, or what would be the capital allocation policy you think?
Yeah. So Sanjeev, the capital allocation policy is unchanged from where we were earlier. So two call outs there. One is that we will continue to look at tuck-in acquisitions, right? And M3BI, for example, so that's one. And then, just as some additional color is any acquisition that we do going forward will have to support one or more of our strategic growth opportunities.
Right.
M3BI was funded entirely out of internal resources.
Right.
And we will keep this gunpowder dry for future acquisitions. There is 2 or 3 areas that we have identified. We are constantly in lookout for those. Outside of this, our traditional areas of capital allocation, such as how we look at dividends, etc., that is going to be unchanged.
Right. Great. I think that's really amazing. So I think the weather in New York is great. So I think enjoy while it lasts, Ajay, and all the very best for this new. It's not now we are 8 months here, but I think I hope it's going to be a long and very successful journey.
So thank you so much, Sanjeev. It was great talking to you and Devashish. Lovely conversation. Look forward to staying engaged, and thank you for arranging this for us. Always good to exchange views.
Thank you.
Thank you very much, sir. Take care.
Thank you. Take care. Cheers.
Bye.
Bye.